what you call it? I wanna know.
Hello dear viewers, my name is Rakesh and I'm your host here with the webinar topic Euro USD and GBP USD technical analysis today. Today is 26th of July 2021 and I'm a community member and not an employee of Dukas Copy. I wanted to make it clear that I am not connected to Dukas Copy at all. But yes, I am a member of community, so I have this opportunity to show what I know here to the other community members and of course the other traders also, if they want to learn anything about the technical analysis. So in this analysis, we are actually trying to ignore the fundamentals. We will be only looking at the price action, and we will be carrying out the analysis of Euro US dollar and Great Britain pound against the US dollar. And if the time permits, we will also carry out the technical analysis of the other major pairs. The major pairs are actually the pairs which have US dollar in them and the major currency pairs. There are 8 major currency pairs. Sorry, they made 8 major currencies, so it makes 7 pairs if we include US dollar in them. So in this session, we will be strictly talking about the technical aspects, as I told you already, and we'll ignore the fundamentals. And as a technical analyst, I already know that we have every information, whether it is political or fundamental or whatever nature, is already priced into the chart. So we will try to follow the charts only, and in this program we will show you only the candlesticks charts. There are other types of charts also. There is line chart, line and area charts, and then there are bar charts, but we will focus only on candlestick charts, and we will also try to find out the key levels for all the pairs, and we will see how we can trade from them. Actually, this is 1 week already has passed since we started this series or this program. So we have already marked the key levels on our charts. So today we will see where the price is and how the key levels are, or the price is how it is behaving at the key levels that we have marked on our chart. And if there is any update, we will try to make an update also on that. I would request you to go to our channel page and then select the playlists and search for the profitable candlestick patterns and the profitable chart patterns program, because there you will know how to trade the patterns and the candlesticks, because otherwise you will not understand what we are talking about in this program. And at the end of the session, I will be also talking about the questions. If you have any question, you can write them live in the chat box. I will try to answer that in this session. Last but not least, everything that I say in this webinar is for information or the knowledge purpose only. You have to do your own research before you put your hard-earned money on the line. Now with that said, let us start the session with the risk disclaimer. It is self-explanatory that trading foreign exchange on margin carries a high level of risk and is not suitable for all investors. So whatever is the past performance, it does not indicate that the future will result the same. So the high degree of leverage is dangerous, so you should work with a small leverage or no leverage at all. So you can go through this by pausing the video after this if you are watching, or you can go through now. And you should not take trade based on my video. You should think, analyze, do your own research and then trade. Okay, let's move on to the JForex platform. Here we have euro dollar daily chart open up for you. So until now, this euro dollar chart daily chart, sorry, that was the USD Chf. This is euro dollar chart daily. Now it is getting complicated day by day. You see, I will mark it from the monthly and then you will realize how complicated it has got. You see, this was the monthly. It was falling like this. Okay, this falling line, the price was not able to pierce through this falling line. Then this is the monthly line in which we had joined the two highs here, these two highs here, and this monthly line, and the price is still below that. So that means it is not in an uptrend on a monthly chart. For that it is sure. But is it in a downtrend? No, it is not in a downtrend, because the price is not making higher highs, that is for sure, but it is not making lower lows also. So the price is neither making higher high nor making lower low. So in monthly it is making a symmetrical triangle. You see this one and this one, because it is making higher lows and lower high, so it is making a symmetrical triangle. Now let us move to weekly. This is for them, those who are new. For those who have been following this program from last week, they already know what is happening here. You see, this was the monthly line, the broader one, and now we have also marked the weekly lines based on these lows here, 1 2 low here, and here also 1 and 2 highs here. So on the weekly also it is trying to make a symmetrical triangle only. But also notice that on weekly earlier price was in an uptrend, but as soon as it failed to make another high here and made a lower high than this one, when it made a lower high than this one, we became cautious that there is a chance that the previous low may break. Now it has set a tone like double top formation here, and if the price is able to break this reaction low here, which is sitting at 1.1704, then we can see a double top breakout to the downside, and the downside targets are sitting at 1.1075. But still the price is taking support at this, although the price managed to give a close last week below this, but today it has already started to go high. Now on weekly it is even complicated. I will switch to daily and the picture will be more clear. You see, on the daily moving in a falling wedge pattern. If we join this high of daily and this high of daily and this low of daily chart, then we observe that it is actually moving in a wedge pattern, and it is sitting right on the weekly rising trend line. So that is why there is a lot of congestion here. Till the time the price does not break out of this falling wedge, we cannot be sure that the price is going to go 1.1975, or unless if the price does not go below 1.1704 and close a day below that, we cannot be sure that the price is headed to the target of 1.1075, which is of course a double top breakdown target. So what is to be done here? We need to wait for the price to close convincingly outside this falling wedge to the top side, okay, to buy for with a target of 1.1975, or we need a close below 1.1704 to find the target of 1.1075 here. Now these both are actually good targets for upside and the downside, but the problem here is that we have to wait, and the patience is the key here. If we cannot wait and we enter a position haphazardly here, there is a chance that we will lose our money. So we will wait, let the candle close above this, because there will be a confluence of the supports. If you see, I'll zoom it in more, and then you will know. You see, if the price goes above this and comes back to retest this as a support, then it will have two supports. One is of the rising weekly line and one will be of this falling wedge resistance, which will try to act as a support. Okay, so it will have more support once the price closes above this and comes back to test it as a new support. So in that case you will have a good risk to reward ratio, because your risk will be the low of this candle here, somewhere here around 1.1748. Even if you open position at 1.1780, you will have a 40 to 50 pips of risk, and you still have a target of around, if I take it as 1780 or 90, you have 180 pips of profit, which is still a good risk to reward ratio, more than 1:3 risk to reward ratio. So in that case I think it will be a good position to buy on the upside if it closes above this falling wedge, and on the downside if the price starts falling from here, then we need to see a close below 1.1704, because if you sell here, then your target will be this 1.1704, which is a decent support for the price, and your risk will be much higher, because this is the minimum stop loss that you will have to keeping this bearish pin bar in mind, and in that case your stop loss will be around 1.1833 levels. And if you sell at these levels, or if you sell at say if the candle close inside and you sell, then you will have 38 pips of stop loss. I'm just speculating it, and you will have a target of 83, which is still less than 1:3 risk to reward ratio. So it is not a decent idea to sell it now. But on the other hand, if you let the price go below this 1.1704 and let it come back to retest this as a new resistance, in that case if you sell it at a bearish pin bar, and that too say I will take 50 pips away from it, if it is you are selling at around 1650, you will have 50 pips of stop loss, and still you will have a lot space to go down. In this case you will have approximate target of around 600 pips, which is a very decent risk to reward ratio. Of course this level here will serve as a small support for the price, but eventually it will break, because this double top when will break down will take will take down this 1.1610 levels as an avalanche takes down the snow with it. So it will be very easy to break this down. The important level here is sitting at around 1.1704, so you have to watch that. I hope you got the idea, and see what is happening on the 4 hourly here. Okay, on 4 hour it looks like it is trying to break above this falling wedge, which is good actually for the price to rise and go back to 1.1975 region. I think it's a good idea if you will let it go up. So what is the idea here? Actually you should know, let it go up, then come back to retest this area as a support. If it acts as a good support and you see a bullish pin bar here, bullish pin bar is something of this sort, okay, or something of this sort, this green candle here. If you see something of this sort, maybe buy at the close of that candle and keep the stop loss below the low of that candle. I mean, if this is the candle, then your stop loss will be somewhere around here, and your target will be around here. So I hope you got the idea about the euro US dollar, what you have to do. Or if actually you don't have to do it, you have to observe, because we have just spent almost 6 sessions only with you. So spend some more time with me, and maybe you will be more confident about what to do and what not to do. Talking about the Great Britain pound, I'm sorry that accidentally today I deleted my chart, but still I have created the lines or made the important levels, so that we need to keep an eye on. Right now the price is trading at 1.38268, which is also the resistance of this falling actually this is not the falling channel exactly, but yes, okay, I have joined the high, so yes, this becomes the falling channel. I am expecting this channel to act as a resistance, and if it does not, if the price is able to close above this, then 1.3865 is the next level of resistance. Now if you ask me why it is the next level of resistance, friends, it is very easy to find the resistances on the daily chart. You just have to not to do anything. You switch from candlesticks to line charts, and then you will realize that the price has reversed from this area once here, second time here, third time here, fourth time here, fifth time here, sixth time here, seventh time here, and if it is going to test this level on the eighth time, what are the probability of reversing from here? Now you answer it. What is the probability of it to reverse this time also? You can write it in the chat if you want to, but as per me, the probability is that it will reverse its direction and come back to 1.3670. If not till that, then at least if not to this 1.3670 levels, then at least to this channel resistance to find further support and rise. It can actually fall like this. From here it can fall like this and then eventually go up. This is one possibility, and the other possibility is that it will go here, get rejected, and make a lower low here. because the price is, on daily chart it is trying to make lower highs and lower lows. So there is a possibility that the price will make a lower low here. Okay, something of that may happen. So this is another possibility. But why I'm saying that the price will get rejected at 1.38656, because you see, when the price was making lower highs and lower lows here, the recent high that the price has made is around this region. So if the sellers are still aggressive, they are bound to push the price lower before this high is broken, because if this high is broken, then it becomes a higher high, and if a higher high is made, then it is actually if a higher high is made, then the structure of the market, which is downtrending, will change, and the price will start going up and will start making higher highs and maybe even higher lows eventually and start rising. So till now the structure is down, so we'll be looking for a selling position. But if it makes a higher high, then we have to look for the long positions. So you have to keep that in mind. So this structure will be intact if and only if the price gets rejected at around 1.3865. This is just a speculation, and to tell you frankly, I am more of a speculative trader, but I don't recommend you to be speculative. In fact, I want you to react to the market, because it takes more patience but it pays you more. Now how you can react to this market? Like I said, there is a chance that this will happen. Okay, there is a chance that this will happen. It doesn't mean that you go and sell as soon as this price comes. No, don't sell. What you can do is you react to the market. You'll see what happens here. If there is something like a bearish pin bar or bearish engulfing candle at this around this area, then you can sell your position, or you can place a pending sell position below the low of that candle. In that case, if on the second day or the third day there is a follow up like this, then your position will get triggered and your stop loss will go at the high that that candle has made. So it is a very safe condition, and you can trail your stop loss, or maybe you can just book your profits at the next support level, which in this case will be this channel resistance first, and on the second it will be 1.36702 levels. Now how we arrived at 1.36702 levels, I don't have to tell you actually, but still, if you want to know, simple thing, open up the line charts and see how the price got rejected in this region, and then you will know. Oh, these are the two lows actually. I have joined from here only, these two lows and these highs here. So this is very small support actually for the price if the price starts going down. Okay, now you want to see 4 hourly for this? Yes, 4 hourly is saying the same story. US dollar looks weak against the pound. The pound may go to 1.3865, but definitely there you will see sellers. If not, you keep an eye on this, put it in your watch list, and maybe tomorrow when we go to the GBP USD pair again, and you will witness that there are the big long tails of the candles to the downside maybe. Okay, let's talk about the New Zealand dollar. Here we have been talking about the strength of New Zealand dollar against the US dollar, and it is paying some 4 days. This is the fourth day actually. The New Zealand dollar is continuously strong against the US dollar, and it is witnessed in the chart also. But here we have been seeing a descending triangle, and we were thinking that the price will go and test this triangle resistance, which it is doing right now when we are looking at it. And maybe it will break out of this, and eventually the price go and check or test this channel resistance again. But you see, what happens is that if somebody is following this channel, then he would be looking to sell this pair as soon as he gets an opportunity, and this descending triangle resistance line is giving us an opportunity to sell. But I'll be surprised because the broader picture shows that the US dollar is weak now in this week, and the New Zealand dollar is strong. So there is a chance that the price will go on top, and here someone may get the selling opportunity. But how the channels generally move, they move like this: chick 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 check. So if this is a check here, so the price has to come back to this region here, but to come back to this region it has to get rejected it at this area. But if it does not and goes up here, we cannot blame the market because the New Zealand dollar is stronger against the US dollar. So there is a possibility that the price will go and get rejected here, or there is a possibility again, if this is a bigger picture of the descending triangle, then this may be the second leg of this descending triangle and the price will get rejected here before it comes back here and maybe getting rejected here again, and this descending triangle breaks finally to give us 0.6575. Now this is just a scenario that I am saying, like a speculative one, but you don't have to react right now. You can wait for the price to get rejected if you want to open the sell positions. But the second thing that I want to tell you is that you always have to keep the structure of the market in mind. Here the price was making higher highs and higher lows, so market was in an uptrend. But after making this low here, the price made a lower high here because it made a lower low here, my friends, and it made a lower high here because it made a lower low here. So expect a lower high to be made and a lower low to be made in the formation. So overall structure of the market is a downtrend. That means the sellers are stronger than the buyers. So there is a very high possibility that this market gets a sell off here and breaks to 0.6575 levels. But on the contrary, 0.6916 level is a very strong support because it was a very strong resistance here and was a strong support here. So because this was a strong resistance here and the price is testing it after breakout for the first time, so this may act as a good and very good support, and maybe this is an opportunity for the buyers to go long, and that is why you can see that there are 4 continuous days of buying of New Zealand dollar against the US dollar. So the price is now in a dilemma. Should I go up? Should I go down? I'll say you don't try to think where it is going. You let it go and then follow accordingly. But right now it is sitting at a price from where it can go down or up. So there is a lot of uncertainty. If you wanted to take a risk, this was the place where you could take a risk. But right now it is not a place to take a risk. So better stay away from this pair. My suggestion, stay away from this pair. Okay. But if the pair closes below this and makes something like this bearish pin bar, then with all your this thing, you can go sell and place your stop loss higher than whatever candle it makes, and then target only 0.6916 for the first time. Otherwise, if you can wait for the price to close below this 0.6916 region with a certainty and come back to test this region as the new resistance, I think that will be a better idea to go short in this pair, because the overall trend of the market in New Zealand dollar pair is down. Okay, talking about the US dollar yen here, on the daily we saw that the price was trying to make higher highs and higher lows, but eventually it broke down on the 6th of July, and after breakdown it tried to retest that channel support as the new resistance and made even a lower low, and then started rising to this level again to make a higher high, but failed to do so. And today the price is trading in a range, actually very small range. This is an inside bar. You see what is an inside bar? If the price fails to break the highs and lows of the previous day, the previous day's high here was 110.592 and low was 110.085, and today's high was 110.583 and low was 110.11. so it is within the range of the previous day. So you can say that there is a lot of uncertainty in the market, although the sellers are in control of the market today, but they have failed to close or get below the lows of yesterday. So we cannot say which direction the market is going to go, but since you see that this rising channel has broken, this rising channel on the 4-hour was very nice. Since this channel has broken to the downside, so expect some down move maybe to this falling channel sub resistance to test as a new support, whatever. But as of now it is going nowhere. I will say just stay away from this market. Such markets give you no money, because you cannot open a buy or sell position here. But if you are already long or short, I think you would love to book your profits at around 112 area, and maybe before that, because this is the confluence of a resistance that I have marked with a rectangle. This is a good area to book your profits if you are long. And if you are not short and you want to go short, maybe 112.18 is a good region to go short. But if the price closes above this and come to retest this area as a new support, then it will be a good area to buy. So all the facts and figures are clear, and we don't care about the interest rates or so, because we talk only about the technical aspects. I just hope it makes sense to you. If you got any question, you still have time and you can ask me in the chat box while I cover US dollar against Canadian dollar and against the Swiss franc. You can still ask your questions in the chat, and if you're watching this stream or the live webinar after it has been telecasted, you can still ask your questions in the comment section. I'll be very happy to answer those. Okay, to moving on to the Luni. See, yeah, Uni is self-explanatory. Actually, it was moving in a channel. It has cleared the resistance at around 1.2646. Currently, it is trading below that resistance. I'm expecting it to take some support around this region when it tests this rising channel support. Now, why I'm saying this? Because the structure of the market, see again, it was first downtrend here. It was making lower highs and lower lows, but here after the break of 1.2646, the price has made a higher high, and it has now about to make a higher low, which the previous low was around this region. Previous low was this, and I'm expecting it to make a higher low around here at around 1.2505 levels. So if it makes a higher low here, then it will give you something like a bullish pin bar like this, a bullish pin bar like this, or maybe a bullish engulfing candle like this, and then you can go long here. Why I'm saying that you go long? Because the structure of the market is long, structure is buy, because the price is making higher highs and higher lows. When the price is making higher highs and higher lows, you want to buy that market at the lows. So this is the low that is going to form. You can buy it, of course, with the small target at around 1.2914 to 1.3015 levels, because this is a huge resistance. Why I'm saying this is a huge resistance here? There is a possibility that it will act as huge resistance. Right now it is not, because it was a very good support in the past, this region. The regions which act as a good support and resistance in the past, in the technical analysis, they tend to act as a very good support and resistance in future too. So you want to book your first initial profits here in this region, and if it is able to clear this region, you want to go long again at the retest of this region. So essentially you will have almost no gap in your buying and selling. So you wait for the price to come back to this region to get it to test it as a support, and then you will look around at this candle from the upside, sorry, at around this level from the upside for a bullish pin bar, or maybe some bullish engulfing candle like this at the support. At the support, if you get that candle, then it will be a very good opportunity for you to go long with a target of 1.4689. My friends, this is a very good risk to reward ratio. Just for your happiness, I will do this. If you are targeting this, you will be targeting around 1667 pips, and your stop loss will be very low around here, 130 pips. So how much risk to reward ratio you get, you can calculate easily. For me it is like 150 by 7, almost 1:8 risk to reward ratio that you will get, or 9 maybe. So it is a very good, but yes, it is a daily chart, so it will take time. So that is the game. This is the game actually of patience only. So more you wait, the better risk to reward you get. Okay, USD CHF, this is the last pair that we are going to discuss. Any questions are welcome in the chat, guys. Symmetrical triangle is what we are expecting here. Actually we can see it clearly, and we have already mentioned it that if you get a price here, that will be your selling opportunity. Why? Because this is a downtrending market, my friends. Prices making lower highs and lower lows, and this is a congestion, or you can say consolidation, before the next move down or maybe a move up. But to move up, the price has to close above this rising channel resistance. So if the price after closing higher than this symmetrical triangle, you don't go for a buy position, because you have a resistance here, and a lot of sellers might be sitting in this region to go and push this pair down again. So it will be a better idea if you wait and watch and see what happens when the price tests this falling channel resistance. Now how we created this falling channel? Simply by joining the recent highs. Okay, so if you have you are following a different platform or different chart platform, you can see that around 24 to 22nd April there was high, and then there was a high around 3rd December or 28th November. So these highs, if you join, you will get a line or projection here. So this is the area that you have to keep in your watch list, or you can maybe set an alert. Now there is a platform called TradingView. You can set alert on the channel test. I think it is a paid version, that's why I'm not using. I just love the Dukascopy JForex platform. If there is a possibility, I will request the programmers, the developers, to put an alert feature where we can get an alert if the price tests a trend line or maybe a channel. If we can name the channel, and then we can get the alert something that your channel has been tested. So if it tests here, I want to sell it with a small stop loss above and target down. But right now what is happening today, you see at the resistance only, the price is giving you a bearish pin bar. There's a follow up, and there is a possibility that the price will go down and test this 0.8986 level here. But it does not mean that you go and sell this pair here. This is not a selling opportunity, of course, but for the small profits you can go ahead, but look for this low of this candle at around 0.914, sorry, 9117 regions. So this candle here may cause you some troubles, because the price will be just hovering here and there for some days before it is clear from this symmetrical triangle and go up or down. So depending upon that, I think we should make a decision, but not right now. It will take around 1 or 2 months for this pattern to get mature. Okay guys, if there is any particular chart that you want me to discuss with you on live, you can write this in chat box, or if there is any stock or commodity that you want me to include in this webinar, you can write that also. There is a price alert available with the rest of orders. Really? That price alert, yes. No, that price alert is for horizontal price movements, my friend, MGA. See, because if you want to get alert right at around point, so it will set a price alert at 0.93 93108 for me here. But what if the price starts moving like this and it tests this channel at around 0.9339? So it is variable. This channel is a variable, or you can say dynamic support or the dynamic resistance. So you cannot fix the alert at one price level. What I want is that I want whenever the price tests at whatever level it tests, at whatever level. Oh sorry, I have to close it. Why it is not getting closed? Oh, get closed. All right, it is a glitch or what? Okay, it is closed. So what I want is that I want it to be dynamic in nature. I want it to trigger every time or anytime wherever it tests this channel, maybe here 0.9455, or maybe here at 0.9267, or maybe here at 0.9142. Wherever it triggers or touches this channel, it should give me an email or maybe give me a pop-up message or something of that sort. I hope you got it. And if like I was saying, if there is anything or any question that you want me to ask, I'll be very happy to answer. If you get any question post this session is finished, you can still ask those questions in the comment section. In the end, like always, I say that I hope you get some idea now about the support and the resistance levels that are of interest in the coming hours and days. Just keep in mind to never risk more than 1% of your capital on any single trade, and you should look for a potential profit of more than 3 times the risk that you are taking. Now with this note, I shall end this webinar. Please press the like button if you find this video useful for you. Leave your suggestions in the comment section, and consider subscribing to the channel for more such videos and webinars. We are streaming every day at 1500 GMT Also, my request is that you can join the Ducascopy Forex community, where there are so many things for the Forex traders. There are live charting softwares also free for use, and the link is there in the description. I wish you a very happy and a profitable day. Thanks for your time, and thanks for watching.